What if the future of food delivery didn't involve humans at all? One company, SERV Robotics, has already deployed an army of autonomous sidewalk robots, and they're teaming up with Uber to take over last-mile delivery. But can this tiny stock survive the brutal road ahead, or will it be left in the dust? Hey everyone, Robert here. Welcome back to The Alternative Investor, where we explore the boldest ideas shaping tomorrow's markets. Today we're diving into a company most investors still don't know about, SERV Robotics, ticker symbol SERV. Born out of Postmates and backed by Uber, SERV is trying to redefine how we think about delivery. With their sidewalk robots already active in cities like LA and plans to scale into thousands of units, this company has big ambitions. But like any futuristic bet, the path to profit is anything but smooth. So today, we're unpacking SERV's history, financials, strategic partnerships, and where this company might be headed next. Let's get into it. SERV Robotics started as a moonshot inside Postmates, developing sidewalk delivery robots that could autonomously navigate urban environments. When Uber acquired Postmates in 2020, they saw enough promise to spin it off as a standalone company in 2021. From the beginning, SERV was designed to solve one of the biggest logistical headaches in commerce last-mile delivery. That's the most expensive and least efficient part of any delivery process. If SERV's robots could do it faster and cheaper than human couriers, they'd unlock a massive opportunity. The company quietly grew under the radar, until it made its public debut in April 2024 via reverse merger, landing on the NASDAQ under the ticker SERV, and that's when the real race began. SERV Robotics raised about $40 million during its public listing, helping fund R&D and expansion. As of now, the stock trades around $7 per share with a market cap hovering near $300 million, still tiny by most standards. In Q1 2024, SERV reported $946,000 in revenue. That's a huge jump from just $40,000 the previous year. But let's be clear, it's not profitable yet. The company posted a $9 million net loss for the quarter. That means investors are buying into potential, not performance. SERV has laid out bold goals, reach $60 to $80 million in annual revenue and become cash flow positive by the end of 2025. To hit those numbers, they'll need to massively scale their robot fleet and lock down more big-name partnerships. SERV's delivery bots look like something out of a Pixar movie, but their tech is deadly serious. These are fully autonomous, electric-powered sidewalk robots. They're designed to navigate crosswalks, sidewalks, traffic lights, and pedestrians with precision. The latest models are more efficient, faster, and cheaper to produce than the early prototypes, and most importantly, they can run with minimal human oversight. Right now, over 100 SERV robots are active in Los Angeles, but the company has aggressive plans to roll out 2,000 units across multiple cities in 2025. That's the kind of scale that could start to shift market share away from human-based services. SERV isn't going it alone. Their biggest partner? Uber Eats. Uber has already committed to using SERV's robots to fulfill part of its delivery load in major cities. The long-term vision? Reduce delivery costs, speed up service, and eliminate gig economy friction. SERV also works with 7-Eleven and others, but Uber is the crown jewel. Then there's their partnership with Wing, the drone delivery arm of Alphabet, Google's parent company. Together they're testing a hybrid solution. Wing drones handle the long-range flight, then pass the order to a SERV robot for final sidewalk delivery. It's a one-two punch that could revolutionize logistics. These aren't just hype partnerships, they're revenue drivers and credibility builders. SERV isn't the only player in autonomous delivery. Others like Nuro and Starship Technologies are competing for urban sidewalks and investor capital. Plus, traditional delivery apps are still dominant, with deeply entrenched networks of human drivers. The difference is SERV's laser focus on scaling sidewalk delivery as a standalone business. It's not a side project, it's the whole game. But the market is brutal. SERV will need to prove that robots can consistently outperform humans, not just in cost but in customer satisfaction, uptime, and safety. If they fail to scale or stumble on execution, investors could turn on them fast. SERV's success in 2025 hinges on three things: how fast they can scale robot deployment, how deep their Uber partnership goes, and whether they can hit that elusive break-even target. If the company announces new city launches, more robots in service, or expanded use by Uber, that's bullish. But if the burn rate stays high and revenue flattens, this could turn into another overhyped tech stock story. We started this video by asking whether SERV Robotics could actually dominate the trillion-dollar delivery market. The answer? They might not need to. If SERV can even capture a small slice of last-mile delivery, at scale, they could be worth far more than their current $300 million market cap. It's a moonshot, yes, but moonshots are what reshape industries. And with Uber and Google already in the passenger seat, SERV might just be steering towards something big. Thanks for watching. If you're into under-the-radar tech stocks and future-forward investing, hit that subscribe button. I'm Robert, and this is The Alternative Investor. See you in the next one.